Thank you, guys. Kenny Polcari, welcome to F.A.C.E. Thanks for your patience. I'm looking
Thank you
forward
for
to
having me.
Hey, it's great to be able to talk to you, Kenny. I followed your career for quite some time. If you want to show the camera, show your mug, you just click the start video, and I'll be there
where's
with you.
Oh, there it is, right there. Okay,
Yeah.
perfect.
Okay, Kenny, there you are.
There's my mug.
There you are, another guy with wisdom, all this gray hair. I have a little more hair than you, though, buddy. But anyway, great to meet you. You know, I followed you on CNBC for many years. You've gravitated over to Fox Business, huh?
I have. When I moved down to Florida, there was an opportunity to come to Fox, as well as there was some changes going on in the whole industry, right? At CNBC,
Yeah.
it went more they changed the lineup. They got much more diverse, which is great. And they had to make room, right? So there's just moving around. That's all.
Yeah. Are you sure they didn't see your ballot and who you voted for?
I'm not sure if they saw my ballot or not. One way or the other, it is what it is. I do a fair amount on Fox Business on Charles Payne and Stuart Varney and Liz Clayman. So it's fine by me. I enjoy talking to the markets. I enjoy talking about the markets. So whether it's CNBC or Fox Business, I'm talking about the market. So that's what I care about.
You know what? When you're making money in the market or you're losing money in the market, it's not red or blue.
That's
all
right.
The same, isn't it?
It's exactly right. So what difference does it really make? But people feel passionately one way or the other, and that's what makes a market as well.
Yeah, and there's definitely a lot of passion if you could go out and buy a Trump SPAC and then quadruple your money on a day trade.
Yeah, you're right.
Well, I mean, what do you think of stuff? I mean, Kenny, you and I have been around for, a decade or so in the business.
Right.
And have you ever seen it?
Oh, that's good.
Yeah. Have you ever seen it be so easy for amateurs to make money in the market?
Not the way it is today, not the way it's been. And my fear is that, there's a whole generation of people behind us that know nothing other than zero interest rates, because for the last 12 years, they've basically been zero and the Fed's done nothing but pump, pump, pump. And so they only know one way, right? They haven't actually seen what the other side looks like. And my fear is that when that happens, it's going to get ugly because they're not going to understand it, and it's going to be a tough lesson, right?
Yeah, well, if they just went to sleep during COVID, they missed that 3-week bear market.
Yeah.
So anyway, so what you're talking about is something prolonged. Anything in the back of your head that could turn this euphoric bull market, liquidity, the TINA around? You think it'll be Powell's renomination and
so
tapering?
Here's what I think is going to happen. Now that it's clear, Joe Biden made it very clear now that Jay Powell is going to stay at the helm. Lael Brainerd is going to be elevated, so her position is going to increase. She's probably going to start to focus, in my mind, on the crypto world and how the Fed's going to navigate cryptocurrency. But that being said, I think the narrative that Jay Powell has been telling everybody, that inflation is transitory and no need for everyone to get nervous and we got it under control, blah, blah, blah. I think that's going to change now. And I don't think it's going to change in December, because I don't want to see the market have a repeat of 2018 when it sold off 18% or 16% in 4 weeks. I think they want to maintain through the end of the year. And then when January comes, I think that's when you're suddenly going to see the tone of his remarks get more hawkish. That doesn't mean he's going to go way right, but he's going to go from the left side. He is going to come moderate to probably more of the right side in terms of talking about tapering, talking about real interest rates increases and the need to fight inflation. That's when I think you're going to see the tone change. And when that happens, that's when I see you're going to see a repricing in the market. And it doesn't mean panic and, oh my God, throw everything out the window. It just means understand that that's what's going to happen, and then position yourself accordingly. And I think you started to see that. Every time the NASDAQ gets hit, NASDAQ is the key barometer there, because it's going to be those names are going to be the first ones that asset managers and traders go to try to raise money, because they've been so exaggerated moves to the upside that it's almost free money, right? So they're not going to sell Coca-Cola and Johnson & Johnson and Procter & Gamble, because they're big Americana boring names that pay a good dividend that would be defensive. Certainly they'll come under pressure, but not the way Spotify or Tesla or Shopify or any of the other ones are going to come under pressure. And I think that conversation is going to happen in January. And I think that's when you're going to start to see kind of a broader change in the tone of the market. I think he's going to try to control the narrative now through the end of the year.
Okay. I was surprised, everyone, our bailiwick is currency. And I'm sure as a trader, you follow dollar action because the dollar could be a wrecking ball at times if it's too strong. Right.
Right.
So,
right. And look what the dollar's done.
Yeah.
Over the last,
and the market's been fine. The market's been fine with a strong dollar all year.
Well, and it's gotten stronger over the last, let me just see. Right. I'm just looking at the chart now. Over the last, since October, the dollar's gone from 92 and a half all the way up to 96.44 where it is now. I think it's on its way to 98. I think that's where it's going to find some natural resistance. But I think that's going to begin to take its toll. I think the dollar action is telling you that rates are to move higher. Okay.
So it's about rates. Anything that could turn the dollar. I know Ray Dalio thinks that Paul's going to start the taper and not be able to finish it and reverse. Do you think that's a possibility?
No, see, I think it's an interesting observation. I don't see it all. I actually think he's going to start the taper, and in January he's going to increase the pace of the taper. Because look, Jimmy Bullard, who is the St. Louis Fed president, who is currently not on the FOMC committee, is going to be on the committee starting in January when they have that. When some members come off, some members go on. Right, changes the complexion of the committee. Jimmy Bullard was out. 2 weeks ago, he came out and he absolutely said that Powell needs to start to taper faster and raise rates sooner to fight inflation. And I think that's why there's going to be more, because then Esther George is also going to be a new name on the FOMC committee. And she's also in the camp of being more hawkish than dovish. And so therefore, I think the tone is going to take it on. Now, the only, I guess, saving grace we have is that there are 3 empty spots for Biden to nominate 3 new candidates. Now, while they may not be on the FOMC committee, they will be part of the Fed. So their opinions and thoughts and theories will be part of the conversation. So that may temper it a little bit, but I don't think there's any way that Ray Dalio, and I respect Ray Dalio, I just don't see how they're going to start the taper and then stop the taper. I just don't see that.
Everyone's really embraced the melt up here. And this is a little different December, don't you think, Kenny? Because people, normally they harvest their losses, they do tax loss selling. But, with potentially higher taxes coming down the road next year, could this be a different December where people say, I'm just going to go to the door because of the uncertainty of perhaps higher taxes?
It could be. I think that is certainly part of the issue. I think that's part of the Elon Musk Tesla issue too. That he started selling all that stock, kind of thumbing his nose at them, saying, "You're going to try to take more money from me next year. I'm just going to sell it this year, and I'll pay a lower rate." If you want to call anything he pays at a lower rate, but one way or the other.
What he gets at a low rate is the government financing he had for 20 years.
Yeah, exactly right. But you could see as we move into December that attitude that you just said, that people say, screw it, I'm going to just take the hit now instead of waiting to see what happens next year, right? So we could see that as we move into the last couple of weeks of the year. So far, I haven't seen it so much yet, but you could, especially if people are thinking that the market itself is going to get weaker because the Fed's going to change policy. So the market's going to get weaker on its own. So they're going to try to get out ahead of that as well.
Okay. So looking at different sectors, Kenny, are there ones that you favor that are unloved right now? Or, are there any, for example, the miners are taking a hit with gold and silver because of the renomination. At least that's what reporters say. That's the reason they're going to give. Oil has been a pretty good performer.
Oil's been a great performer. It's up 46% this year. I think consumer staples, which is a real laggard this year, right? Consumer staples are only up 7.5% on the year, when the rest of the sectors, right? Oil's up 46%. Retails are up 60%. Basic materials up 45%. Real estate's up 31%. Consumer staples have been really underperforming. And if you're in the camp that you think it's going to get tough next year. Consumer staples are going to be a defensive area that, because they're staples. They're stuff you need every day, right? You need soap, you need shower, you need shampoo, you need, detergent, whatever. You need Q-tips, you need toilet paper. All that stuff you need every day. Our consumer staples are going to provide, I think, a defensive play if you're worried about next year. So I'm in that camp. So I like the consumer staples for next year. I like financials. I continue to like energy because I think energy, right now it's, we're seeing this weakness, but I think that's baloney. I think energy is going to start to surge again, and it's going to, make its way towards $100 a barrel. Look,
okay, so what? Okay, so what about what is really in the public's eye is the shortage of semiconductors, and
right?
I heard the DEA made a bus where they found 20 semiconductors buried in a few pounds of cocaine. So I was wondering if you think these supply chain issues are going away. They don't look transient to me. Maybe that's what's holding people back from buying staples is being able to get almost everything we have here is made in China, Kenny.
Yes, I understand that, which is a whole nother problem, how we've put ourselves at risk. As a matter of fact, there was an article today, I don't know, it was in the Journal or where I saw it, the Journal or on Bloomberg. Some companies, some U.S. semiconductor companies building a big plant in Texas now to produce semiconductors in this country so that we get off of that dependence of whether it's Taiwan, China, Vietnam, Hong Kong, wherever else they're making them. They're going to start making them down in Texas. It was a big story. I got to see where it was.
Okay, and I think didn't Intel's putting in a huge plant in Arizona.
Right. And so they're starting to smarten up. These guys are starting to say, what the hell are we doing to ourselves? We're putting ourselves at the mercy of China and parts of Asia. For what reason, right? And so I do think from a semiconductor point of view, look, semiconductors are going to continue to be strong because the whole world is running on semiconductors. Everything you have, your watch, your refrigerator, your oven, your car, everything's got semiconductors in it. So that's not going away at all, right? So I like semiconductors as a holding, as a long-term investment, whether you pick, NVIDIA as whether you pick individual names or whether you pick the semiconductor ETF because it gives you a broad range of names. But I wouldn't be selling my semiconductors at all. Okay. But I do think things like consumer staples are not necessarily, toilet paper and baby powder and stuff like that is not dependent on semiconductors, right? But they are dependent on your quality of life. And they have so underperformed the market this year that I actually think that's probably one of the safe places next year to kind of have in your portfolio. You maybe want to overweight them a little bit, which is kind of what I'm doing, right? Any new money that I'm putting to work, I'm not chasing technology and the high growth names that I think are going to come in. I'm not selling the ones I have either. I'm not chasing and adding to those current positions, but I am adding to positions in the staples and in utilities and in industrial names like IBM and Honeywell, because I think those are safe places to be as well.
So are you managing money now, Kenny, or are you talking about what you're doing for yourself?
I'm managing my own.
Okay.
I work now as chief market strategist for a $1.2 billion independent RIA. I represent them when I'm out talking at conferences or client events or bringing assets to the firm on their behalf. But I'm the one at that point. I'm not the one who's managing those assets. I'm involved with the portfolio manager who does manage them, building the portfolio. But I much prefer this. I much prefer getting out there and talking to people and being kind of the face and the voice. I don't want to sit behind a computer all day long and,
Do you miss the floor, bro?
I miss the floor tremendously. Look, dude, I spent 40 years on the floor. I went there in 1980 when I was 19 years old. Now, here we go. 1980, right after the Jimmy Carter years, right? When the country was a complete mess, right? The economy was a disaster. It was bankrupt after the Iranian hostage crisis. Ronald Reagan had just become president. They had just passed they were in the process of passing the big Reagan tax reform package. Interest rates were on their way, by the way, to where? 21%. Unemployment was going to 13% and inflation was going to 10%. So for everyone out there that says, "Oh no, you're a dinosaur, never going to happen," trust me. Because you lived it like I did. I was 19, 20 years old when interest rates were 21%. And anyone who had any money in the world, and the Dow was trading at 800, last night it closed at 36,000.
Yeah.
But that was trading at 800. If you were anybody who had any money in the world and you had the choice, you could go out and buy American Telephone and GE, which are fine American companies, or you could take your money, walk across the street to the bank and give it to the banker. And guess what? You're going to earn 21% risk-free, sleep at night, right, on your money. 21%. Think about that. Earning 21% for just doing nothing, giving it to the banker. Versus you're trying to earn 21%, picking stocks and all that stuff, which is great. I love picking stocks and all that. But back in 1980, when the economy was a disaster, you could earn 21% of your money by giving it to the banker. And that's what people did, right? And we know that. And then
so we're pushed out on the risk curve. That was all part of QE for decades now. So do you think there'll be some problems brewing, like I'm talking about retirement accounts where people have to generate 7-8% returns, and you're talking about financial repression with low rates like this, and these funds were pushed out on the risk curve to attain that there could be a problem with people counting on their pensions and them not being there?
I do think that's potentially a problem. I also am worried that once the current administration gets done with their spending programs, that they're going to look to raise more money and they're going to start coming after. You already hear the talk about they're starting to come after, or they want to come after, retirement plans that they view as overfunded, has way too much money in them. So they want to start taking away your money that that they promised you they're going to put away. It's going to be for you. You're going to provide for yourself. You're going to help us out. Now they want to help themselves to all the things that we did. So I'm concerned on a number of levels that
market wouldn't like that policy, would it?
Market would. There'll be a revolution, I think.
How about a transaction tax?
I think a transaction tax is a bad. You're talking transaction tax on stock executions. I think it's a lousy idea. Yeah, I think it's a lousy idea.
Think it happens?
No. And listen, the New York Stock Exchange already said to, if it's at the federal level, but when New York State wanted to impose a transaction tax on stocks in New York City, the New York Stock Exchange stood up and said, listen, we'll just pick up and leave. We'll go to Texas, we'll go to Florida, we'll go to somewhere else that's much more accommodative to, right? And so I think that's going to be a tough sell. I really do. To get a transaction tax will be a tough sell because it penalizes everybody. Penalizes even you and me on a transaction tax every time, right? As Joe Q citizen, Joe Q public in this country, you're going to get penalized for everything you do.
Yeah, I don't mind making my broker rich with volume, but I sure don't want to, make the federal government rich on me churning my own account. So, what about the trial balloon they floated about taxing unrealized cap gains? Who would ever carry a position? Who would ever trade?
I don't even know how you do that, because if you're going to tax me on unrealized capital gains, am I getting the deduction on unrealized losses? I mean, it's got to work both ways if you're going to do it. And then how do you actually do it? On what day of the year are you going to pick whatever you want to pick? Is it the 31st of December? Is it the 1st of December? Whenever it is. I just don't understand how they could realistically do that. And I think there'll be massive pushback on that. So I think, they talk about it like, as if it's going to happen, but I don't see how it could possibly happen at all.
Do you ever look at markets outside the U.S., Kenny? Because if the dollar does get up to that 98 level, they should be pretty cheap. And then you get a dollar turn. There could be some big plays next year on a resumption of a bear market in the dollar. Are you starting to think that might be a possibility?
Well, I hadn't really thought about that, but now you do give me food for thought. I do look outside the U.S. It's funny, I don't look to Asia for opportunities. I look to Europe for opportunities. And I think Europe is actually going to, for a foreign market,
outperform the U.S.
Well, I'm not sure it's going to. There are calls next year that Europe is going to outperform the U.S. Morgan Stanley put out a piece 2 weeks ago where they said avoid the U.S. next year and put your money into Europe, which I think was really, whether or not you want to call it a bold call, it was an interesting call by any stretch. I wouldn't be abandoning the U.S. at all. I would put money in Europe because I do think that they're right in the sense that Europe, I think, is going to be a safe place to put money, but not to the point where I'm abandoning my U.S. holdings or putting new money into U.S. names. But I'm not. Okay. It's funny. I don't know why. When people talk about investing abroad, my first thought is not to go to Asia. Not because I had a bad experience.
That was good intuition. That was good
Yeah.
intuition when it came to Chinese tech stocks, even though
Yeah,
they're
yeah. I just,
recovering.
I think
How
this.
does China, Kenny, I want to ask you, I've asked a lot of people this.
Yeah,
Remember back in 2008 when we
yeah,
were in the Great Recession, and they said China wasn't affected. They didn't have toxic paper, and they were still growing, and they were going to help pull the world out of the recession. So with
right.
what's happening in China, are you worried that if they were, they're a much larger part of the global GDP now than they were then
Yeah,
15 years ago,
yeah.
could they drag us into one?
I think they could. And I think, and that's a little bit of my fear with China as well. Not only could they drag us into one, but there's way too much risk. Like if you're anyone that's getting money, really, why would you put money into a country where they could change the rules from Monday to Tuesday? Suddenly the rules change, and you got nothing to say about it. There's no debate about it. It just is what it is. Look what's happened to Baba, right?
Yeah,
Alibaba. I mean, it's a
yeah,
disaster. And
yeah,
so that's why I think when there's opportunity to invest abroad, why am I going to China of all places? I mean, unless you're
yeah.
going to go with such a small percentage of your portfolio, so it's insignificant. Okay, well, what's that number going to be? 2%? Why bother? I'd rather put my money to work where I know it's going to work, and I don't have to worry about waking up one day and having Xi Jinping say, "Oh no, we changed the rules and too bad." Right? Not doing it. I have no reason to do it, so I stay away.
Okay, Kenny. Well, it was really great talking to you. And what's your big idea for 2022? I gotta
So
get used to saying
I
that.
well, I know. Yeah, really, right? It's only 4 weeks away. Can you believe that?
Yeah.
2022 is 4 weeks away. It's unbelievable. Listen, I'm in the value camp for 2022. So, like I said, those names that the sectors that I talked about: consumer staples, financials, and energy, and some industrials. So I continue to like IBM. I love JP Morgan. I love Nvidia. Well, Nvidia, although it's not in that sector, but I do love Nvidia. I got to tell you something else. As much as ARK, which is Kathy Woods's,
Yeah.
disruptive ETF fund, I got to tell you, as a long-term play, you got to be in disruptive tech. So I own the ARK fund, and now it's gotten crushed over the last couple of days. I haven't put any more money to work yet because I want to wait and see how it reacts. But on a broader sense, next year I'm playing it much more. That's because it's also my style, right? I'll tend to be a little bit more conservative next year until I get a better sense of what's happening, not only in the administration, but what's happening with the Fed and what's happening with policy. So I tend to be, and I'm also 60. I'm not 20, right? If I were 20 or 30, I might have a different view of the world. But I'm 60. So, I'm on the back nine. I'm probably on the 18th hole right now, right? So I've got to be a little bit different in my thought and my methodology in terms of where I'm allocating my dollars to.
Yeah. So we're not thinking about, where we're going to be in 25 years anymore.
Well, listen, where I'm going to be in 25 years is probably pushing up daisy. So, you know what I mean?
Any day, hey, Kenny, any day looking
25 years, I'll
down
be
at the
85.
Hey, Kenny, we'll still be talking maybe because you know what? Any day that you're staring down at the grass
Yeah,
is a great
it's
day.
a good day. Yeah, no, I hear you. All right,
Kenny, I
listen,
had a great time talking to you today. I'm so glad I reached out.
pleasure was mine. Anytime. Thanks a lot.
And Kenny, you know what? Your ideas. I'd be watching the multinationals next year on a dollar turn,
Yeah, I absolutely agree.
and
Yeah,
and maybe we'll get back together and talk about this next year and see what's
but listen,
evolving.
for another reason as well, because the multinationals are just what you are, right? So it gives you exposure
Right.
multinationally, right? So you're going to get exposure, and they're also good dividend payers. And they're big. Some of them are big, boring stocks, but guess what? Sometimes boring is good.
Well, have a great Thanksgiving, Kenny, and save the drumstick for me.
And you as well. Bye bye.
All right, really nice talking to you, everyone. Kenny Polcari, you could follow him on Twitter at Kenny Polcari, and as you can see, Kenny still has a lot of energy and passion for the markets after, like me, being in the markets for 100 years.
You can get me on my. I take my daily market commentary that I publish on my Twitter, but I also turn it into a video series on my YouTube channel, Kenny
How's this,
Polcari Media,
Kenny?
so you can get it there as well.
Okay. All right. Well,
All right.
Kenny, thanks so much. Happy Thanksgiving, buddy.
You too. Bye bye.
All right, that's a wrap, everyone, for Turnaround Tuesday. Good hunting the rest of the day. We'll see you tomorrow. Okay, you're very welcome. I'm glad you guys enjoyed it. That's a wrap. You could join the team in 17 minutes for the morning edge. You're very welcome. We'll have Kenny back. Adios. See you, Laura, Samuel, Austin. And don't just count your pips, count your blessings. Every day should be Thanksgiving. See you, Jatin.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.